10 a.m. in London when we're recording or doing this live update. I want to welcome you all. If you have any questions, you can just put them in the chat box. Don't be shy. As well, don't forget to like the videos as well and subscribe if you like this presentation. I hope you will like it. Okay, so tariffs, right? Tariffs introduced. So they increased tariffs from 10% to about 25 or to 25%, and that's obviously what the market has been worried about. And probably what will happen is we're going to have higher inflation in the U.S. We already talked about this in the past. I shared you a few links to some university reports, but as well, let me see here if I can go to my Twitter. This is my Twitter. So I shared some content a few hours ago, which is that economists at Moody's Analytics. So Moody's is the rating, credit rating group. So they calculate that a 20% increase in tariffs on these 200 billion Chinese imports would reduce US GDP growth by a 0.8 percentage points by 2020. So I think what this actually means, it just doesn't mean necessarily it's gonna cause it to be recessionary. It just means that what's gonna happen is that economic growth is probably gonna be lower because of this. As well, if they would go ahead and add 25% tariffs on sort of all the imports from China, and then that could cause the US GDP growth to decline by 2.6%, and it would cost the economy about 33 million jobs. So I think this is really what, given the market reaction, I think this is really what the market was fearing. And at one point, I mean, Donald Trump necessarily didn't say that they were going to add tariffs from the reminder, but he said they could do that. And I think this is really maybe why we're not seeing like such an aggressive move in the market that we have seen so far, just because we didn't see an additional 25% on the remaining imports, which I think is about 325 or 350 billion. And that is, I think, why the market is sort of doing what it's doing. So let's take a look at the market. So we can begin with the S&P 500. So the S&P 500 is definitely a bit lower today, and I think again maybe the reason why they didn't sell off was because they didn't add that extra tariffs on the reminder, and then as well, it's a little bit like sell the rumor, buy the fact, or buy the rumor, sell the fact is the actual way you say it. So in other words, when we're trading up here, that's when they hinted or that it clearly said that they were going to do it. So people sold, and now as it's a fact that they have increased tariffs, you don't necessarily see any reaction on the back of that because most people already took positions already here. So people that really wanted to sell, they have already sold. So that's it. And now, of course, I think the longer run prospects for the US economy, I don't think they are extremely bearish, but I think for countries like maybe China, Australia, and maybe even Europe, these countries as well, they were going to have some issues, and we will have probably also higher inflation in the US, which should eventually force the Federal Reserve to actually increase interest rates. So I think overall, that's maybe can explain this price action in stock markets. Now let's sort of look beyond the near term. Okay, beyond the near term, this is still bad news for the world economy, and I don't really see still why people will be buying here. I think we still will probably trade lower in the S&P 500. I think that makes makes sense, especially also from sort of a technical point of view. So Fibonacci, you take that from the very low in December to the very high. Your first fib level kicks in at around 22,715. So I think, I'm not saying we're going to go all the way down there, but I think maybe to 2,785. That will be very reasonable. And then it wouldn't surprise me if we go all the way down to these lows. So I still think we have more sort of bearish action here. So if we go to something like the CNN Fear and Greed Index, which is quite good, and and bull markets, it's good to point out lows. That's really what it's good for. It's not really very good to point out major highs. But the CNN Fear and Greed Index is here around the 40 mark, and we can still decline further lower. Like if this is a genuine bull market, then maybe we'll sort of go down here to maybe 20. We're not necessarily gonna revisit all these lows here we saw in 2008, but maybe down to here, and then from there bounce. So I think that we can probably see this definitely trade a bit lower, and the question is how we're gonna trade that view. So the different ways of trading it, but what I would prefer is really to let me see, I need to clear this out. I think below 2919.4, this trend is going to be bearish. And yesterday I shared with you guys, I said scalpers are probably going to try to sell at these highs. And I'm still going to stick with that view, that around something like 2,876, I think people are going to sell all the way up to 1,900, which stops at 1,919. So this is sort of the sweet spot. This is where it would make sense to short sell. And then I think people could potentially target something like 2791, which is this low here from March. So I'm looking for this, and I'm definitely not looking to buy just yet. To buy, we need to take out that high. Maybe what can happen if we don't go much lower is that we spend a lot of time here. If we spend a lot of time here, and it looks like we're gonna have a situation like here, where the market went up, down, and then up, then at that point I think it makes sense to get long. But I don't think we're gonna have a situation like here when it just went straight down and then straight up, unless we have some sort of a deal over the next few days, which will sort of encourage that sort of reaction. Well, we added as well. Let's talk about the DAX. So this is the DAX, and the DAX is at this buy zone I've been sharing with you guys. Now, I would not buy here just yet. It is perfectly fine to buy here from a technical point of view. I mean, the reaction is pretty much what I was expecting and hoping for. But the reason why I don't want to get involved here, because I think both the Nasdaq 100 and the S&P 500 could trade lower. So I don't really believe that this is the perfect time to buy. I think if I'm right and the S&P 500 and Nasdaq 100 trade a little bit lower with a few percent, then maybe the German DAX is going to be trading here at 11,730. So that's why I would not engage here. On the other hand, if the S&P 500 and the Nasdaq 100 go down by themselves and reach the buy zone, and we're still here, then yeah, at that point it makes sense. Now, where is it time for me to invalidate my view? Because you always need to have a level where it doesn't make sense. Well, if we trade above something like 12,234, which is just above the May 8 high, then I think that would potentially be sufficient. We'll end this little downtrend that we're dealing with here. At that point, the market goes up a bit, and then probably lower, and then at that point, we can probably try to buy a dip. Now, the different ways of working with sort of the risk-off environment, and as I've been mentioning before, I like things like the Japanese yen versus the pound, the Japanese yen versus the euro, and the Aussie dollar. You can see here how the market moved a little bit higher, traded above the May 9 high, but this is still a descending triangle, and the longer term macro fundamental conditions have not changed. So I do think that if we would have a revisit of 143.81, if we would even go that high, I still think people are gonna sell. And this right now, it doesn't make sense to change this view as long as it's below 144.25. As for your dollar yen, it's just that support at 109.70, a bit oversold, I think. But as long as you trade below, I think 110.90, which is the breakup point, I think this market will continue to be bearish. We might go up a bit, maybe to 110.24, 110.50 in worst case, but I think eventually we'll trade lower here. This is not as good quality though as your euro yen, pound yen, and Aussie dollar yen, just because you have a pattern, which is the inverse head and shoulders. This is your left, right shoulder. This is your head. We breached that right shoulder. The difference between the head and the neckline gives you the target. So break here could take you down to 108.45. you have that pattern, but it's not a lot of people that know about that pattern, and because of that, I don't think there's a lot of people traded. Not a lot of people see what we're seeing right now, or what I'm seeing. And whereas in the other ones, we have nice, beautiful, normal technical patterns. Now, this is the GBP versus the USD, and you can see how prices are just converging. And I have a suspicion that this could become the new euro dollar. Euro dollar, you know, hasn't done nothing for months. In fact, hasn't done very much for like a year. I think if it was a cryptocurrency, the exchanges would delist it because there's not too much action in there. I think here you can clearly see how we're converging into this triangle. If you want to, you can still play with this momentum that you have since 2009 with a low here, low here, low here. And as you might remember, I said people will try to buy here, and so far, you know, the market has sort of reacted the way I suspected. We reached that target. We did trigger a few stop loss orders, but then that was it. And I think we can still go upwards, but looking at this is more into that convergent triangle there. So I think if you can get out of it, that's what I would have done, because I think this now is just a very neutral market, and I think we can probably even sort of lower things into something like this at one point. I would prefer something like this where we look for the break to the low and then sort of target lower levels like that. Alternatively, sort of potentially turn bullish here. I say just potentially because you have all these major highs here, so it wouldn't make too much sense unless it converges for more and we have a break maybe in a month's time or so. I think that's it. Actually, forgetting here, gold prices. So gold within that range. There's absolutely nothing we can do here. The market is not panicking, otherwise they would have been buying a lot of gold. So I think here, you know, just need to wait. Maybe as the US markets open, they will sell. Sell stock markets, and we can see this higher. But I don't really know exactly what's gonna happen. Bullish, bearish. Okay. Crude oil prices continue to be bearish, below this trend defining level at 63.04. And I think that's pretty much it. No change to the outlook here. So we covered all of the main markets. Let's see if you guys have any questions. Good morning, hi there, and good morning, Ronnie. I hope you guys doing well. Thanks so much for joining me this morning. I woke up at 5 a.m. this morning. I put the alarm on 5 a.m. The sun was already on its way up here in London, and wanted to check out the market reaction. It's not a lot happening really, fortunately. But yeah, here we are, almost the weekend. About the Dow. Cool, let's take a look at the Dow. Dow. Let's see if I can find it. So the Dow is actually a bit interesting. It's a little bit like your DAX, because the Dow is just above these two important levels, which is 25,23.1, so 25,231 and 25,356. So just above these two levels, and at these levels people bought before. So they bought here in March, and they bought here on the 8th of March and on the 22nd of March. So it could be that this is just going to do like this. It sort of depends a little bit on your view. It's difficult for me really. I don't really know. I can tell you this though. I am bearish pound yen. Stop loss is a break even. And if it works out, it works out. If it doesn't work out, it will be a break even trade. So that's the only position I'm holding right now. The question is, do you believe that they're gonna have a quick deal between US and China in the next few weeks? If you believe so, then you want to buy down here. If you don't think they're gonna have a deal, you think things are gonna deteriorate, and then you don't buy. Rather, you wait for a break to 25,231. Take that out. I think at that point we can probably trade lower. So we've got a question as well about the Spanish stock market. So I actually saw that. So I think It's just above support as well. So if we take out yesterday's low, we'll probably drift lower if we get a close below this level. So yeah, take out this level, we're probably gonna head lower. I don't know exactly what's gonna happen, but I think we just need to wait. Like right now, people are a bit complacent because obviously the news happened overnight at midnight US time. So it sort of really depends now, because it looks like, at least in Europe, they're not really willing to take any strong bets on. They haven't really called this bad or good yet. So I think what can happen is that we just need to see how what happens when the US joins in a few hours time, like when the actual cash market opens. So when people start to buy the actual stocks that make this up, I think at that point we just need to see how they react. And again, there are various ways of playing the current turmoil. Unfortunately, there's too many combinations as always. But if you believe it's going to be good, well, then looking for a dip in the Dow or the German DAX is good. If you think it's going to be bad, then look at pound yen, euro yen, Aussie dollar yen. You can also look at something like gold. If things turn nasty, then gold can take out 1291.33, and then you can head upwards. So you have these different plays here that are driving things. Now, if you look at things from the longer run, again, this data is not really that good. The outcome is definitely not good. We'll probably see no major changes like right now, but maybe 2 to 3 months from now, it's gonna be more of it's gonna be a higher effect. Let's see if I can find. So this is my Twitter. I'm not logged in now actually, so I can't actually see my own likes. But I showed you this a few days ago. I would need to log in here. Let me see if I can do that. We'll skip that actually. But there are signs in the consumer price index series, not all of them, but in major compliances like washing machines and I guess TVs and all this that is being created, produced in China for most of the time. Things like that, prices have already risen by 10% in the actual consumer price index. For many, many years, as you know, you can get bigger TVs, cooler gadgets for less money. Unless of course you're buying like the latest technology, like and so for a long time you can get yourself a washing machine, and you can still get yourself a washing machine, to be honest. But that now is going up in price. In fact, a lot of that stuff should be going up with a 25%. So if you want to buy a TV, buy it now. Not really, but if you understand what I'm saying, like if it is coming directly from China or components produced in China, then most likely that will be slightly higher pricing. So you want to check that out. Maybe there's even some arbitrage here. No, actually, yeah, no arbitrage. Like you buy the stuff in the Europe and then you ship it over to the US. Yeah, higher inflation. That's definitely on the cards. So this is allowed to be prolonged. If they do the full thing, even worse at that point, let's just turn bearish. As a little final chart here, I want to show you something. So like a little bonus. So this is the China A50, which is a stock market index made up of 50 large mainline Chinese shares. So this is usually, if you are a foreigner, non-domestic, then non-domestic. If you're just a foreigner, if you're not Chinese, right? Then this is your way into the Chinese market. And what's happening here is that you had a small head and shoulders, which is this head and shoulders. I shared this one in the past, and the break to the downside here opened up with this head and shoulders target, which suggested a 6.59% decline. We got that, so the market slid and traded lower. But now when I look at this, I'm thinking they have implemented those tariffs, and you know, if you look at this really closely, you can see that maybe this is just a big left shoulder, and maybe we want to create that right shoulder now. So maybe we're just gonna go up a little bit, but it looks like we can attach a trend line here. Now this is not tradable yet because we haven't traded below the high, but if this goes up, spends a week or two here, then goes lower, then you have your perfect head and shoulders, and then that would suggest really that the market could decline with about 13-14%, which would take the Chinese stock market all the way down to the lows from the year. And guys, this market was up with 39%. From this low up here was 39%. So why do I even bother to look at things like this? Because it can give me some indication what people really think and what may actually happen in Europe eventually. Not that Europe and US stock markets are decline all the way down to the 2019 lows, but it could easily go down to the first fib, which is down here as I showed you in the S&P, if not a little bit lower, and then we'll be creating a truly interesting and massive head and shoulders here as well, which would be this one. If you just imagine that we decline like this, okay, we can probably go like that, which will be more than the first fib, and then spend maybe the rest of the year here, and then probably go upwards maybe in 2020 or something like that, unless we have that recession that people have been talking about since the beginning of time, and then we go long like that. Okay, I think we're gonna wrap things up. Guys, thanks so much for watching. We're 7 people watching right now, but only 2 likes, so do make sure you sign in, and do make sure you click and hit that like button. Please help us start trending on YouTube. Have a great day, guys, and a good weekend, and I'll see you guys on Monday morning here at the ATFX channel at 9:30 a.m. London time. Thank you.